like to greet you guys at the top of the morning. And welcome back to another episode of Wealth Wise Guru. I'm your host, John Shaft. It is Monday morning, February the 10th, 2025. And we are just 20 minutes just after the bell has rung. And we are investing this morning $25,485. And the portfolio is up this morning by $404.56 with a buying power of just 141.15. Stock market is down today amid inflation worries and geopolitical tensions. Today the stock market is facing a downward pressure as investors react to the rising inflation concerns and geopolitical tensions. Key things include the impact of potential interest rate hikes by the Federal Reserve, which are causing uncertainties among traders. The technology sector represented by the Invesco QQQ Trust is particularly affected with major players like Apple and Microsoft seeing declines. Additionally, the energy sector is underperforming due to fluctuating oil prices, while consumer staples are showing resistance as investors seek safer bets. Overall, the market is volatility reflects a caution segment as participants waits for the economic data. And still for up and coming events this month, February the 14th, we got CPI reports, the Consumer Price Index report, which provide insights into inflation trends influencing the Fed policy and market segments. And February 2/15, Fed's meeting minutes, the release of the Fed's meeting could clarify future interest rates decisions impacting the market expectation. 220 earnings seasons. Major companies will provide report earnings, which could sway the market's decision direction based on performance relative to expectation. So Trump is to impose 25% steel and aluminum tariff. Tariffs is latest twin escalation. And the study reveals the stock market volatility response to Trump's 2024 victory. A new study indicates that the stock market is reacting on predictably to Trump's return to the White House. This is uncertainty is influencing investor segments and market stability, leading to increased volatility. Stock markets today, the Dow, the S&P 500, Nasdaq set to bounce back as Trump tariffs move to balk steel makers. The market index polls for a rebound as steel maker benefits from tariff announcements. This positive segment could lead to a broader market gains, reflecting investor optimism in Pacific sectors. So let's take a look at the portfolio and see what the portfolio is doing this morning. So that was your morning brief concerning the market and how it is moving today. We had an earnings report on last week. There were several major companies last week that reported the Q4 2024 earnings report. And some companies did hit their mark and did better than what their analysts expected, and then some fell short. And so let's look at the portfolio this morning. I have a pending option. I just got accepted. Pending options in place for SoFi. That's one at first one here come up at 620. Let's see, that's one that just got accepted. No, it was actually this one here. This one just got accepted this morning. And it is a call date. Well, actually, I guess it's not it, because this is the date on this is 1/23. So the one I actually just put in place was this morning. So let's go back out of here. Let's go to this one here. And so yeah, this is the one that I just purchased. For some reason I got the 114. Let me double check. Maybe I got more than what I thought. Okay, let's see, 220. Okay, this is the one I just implemented. Let's see. Yeah, this is it right here. And so this is a full SoFi technology, and this is a call leap. It just got accepted just a few minutes ago. Expiration date is 12/20/26. And so far it's up this morning by $3. As you can see, let's take a look at SoFi. SoFi technology is trading at $15.14. It's up this morning by 23 cents. My current position in SoFi is 150 shares. Value at $2,275. It is 3.51% of my portfolio. Total return this morning is a little over $32. Still in the negative, just around $60. I have three option strategies in place on SoFi. Total return on the option side of it is $20, and it's negative 103 here. So we got some catching up to do with that particular stock. And my thought process putting this option here in place, I was going to purchase 100 shares of SoFi. Okay, hold on. I got to change that to share. I was going to purchase 100 shares of SoFi, which would have cost me $1,500. So I did not have $1,500 to purchase that. So instead, I did what you call a leap options. So you hit trade option, and a leap is one that's a year or more out. Actually, I think 6 months or more out, but I usually refer to a leap as a year out. And so we go up to the top here, and we're going to select our date. And we're going to select, since it's already February, we're going to select the February month, 2026. And we select buy, and then we select call. And then this is the current price here is $15.18 or 19 cents. Anything below it is into the money. And anything above it, that current price is going to be out of the money. So we selected $17. That by 2026, we are expecting for the stock to reach these $17. The chances of that happening is 23.88%. And I mean, that's the chance of profit is 23.88%. The stock, you can see it's moving in real life time. I can better get it out of my mouth, and it started to change, as you can see. The volume is the current investors that have implement this particular strategy is 44, and then you have another on the sideline, 1,500 and 1,757 that are interested in this strategy as well. Volatility is high, and IB is volatility, which is 61.56%. The delta, which is the main important part, is 5774. Got a low theta. And so we just implement this particular strategy because of the theta. And if you implement this particular strategy, you put your 1 there, 2, 3, 4, 5, however many contracts you want to have in place. And then you just put this highlighted. You just type in that highlighted figure there, and that figure comes from the limiting price area. And you want to make sure when you highlight this area that this little sign here that say high field likelihood, you want to make sure that that is in place, because that means that the strategy will be accepted by the system. If it's low likelihood, then that means it won't be accepted. You need to have at least high. Median may be accepted, but high is definitely going to be accepted. And so this will be your max cost here, which is $335.04. You go out here and hit your break even. So that's $3.35, $3.35 multiplied by 100 times one contract. And that's because when you deal in regular trading, you buy one contract. You are buying and dealing with one contract. And the option, when you buy one contract, you multiply that times however amount the cost is, the least amount on this limiting price is $3.35. So you multiply that times 100. So 335 times 100 is 335.04. And so instead of you dealing with one contract, you're actually dealing with 100. And that's the difference in options and then regular trading. Regular trading, you're just dealing with just one one contract, and while options are you dealing with 100. So your profit is going to be three times higher dealing with options than regular than a regular share. But at the same time, your losses are going to be equally greater as well. So you have to keep that in mind when you are doing option trading. So we'll go around here and hit the break even, and this will be your losses. You can only lose what you put in, which is 335. It's not going to go beyond that. And this is your profit from the black to the green area. It can go all the way up to 300. It can go to unlimited. Okay, once it goes to unlimited, there's no telling how much that would be. It could be 1,000. It can be 500. It can be 1,000. It can be 5,000. It can be 10,000. Just no way to tell it. It just says unlimited. And so you just click review. And see, I don't have enough buying power, so I would have to buy some, make a deposit from my bank. I need another additional $264.47 to implement this particular strategy. So that was at 57.94 delta, or 57.8 now. Let's look for a even higher delta. Will be like say 20. We're expecting for it to go up to 20. If it went up to 20, then the chance of profit then drops down to $19.50, $19.15, with a volume of 20. But it has another interest, 1312. It has a volatility of 61.52, a delta of 47.61. 47.61 that's the amount of money that you'll make per day on this particular strategy. It has a low theta. Theta is low. A high theta will turn around and eat up at this over a long period of time. So say you're trying to hold out as long as you can, because this is going to be a leap in this year. A leap is a year or more option strategy. So say you want to hold out as long as you can to try to make as much profit as you can, but this theta here turns around and eats up at your profit. So they always got a way of getting back at you and taking some of that money back from you. But that's what this is called. This is the theta that eats up at the delta. But this one right now it's kind of, that's a low theta. And so the idea is to accept when you're making a particular call, is try to get the highest delta you can. Preferably like a 60 or either 70. That delta would be great, but in this case that doesn't exist. So this particular delta here is 57, 78. And so you would just you would then you would just even add to your watch list so you can just buy it. Or you could you can do what you call an iron corridor. An iron corridor is instead of you clicking here and you're looking at your delta, so you're always gonna look at the delta just to see how much it is. The higher the delta is better when it's a call and it's going up in value. When it's going down in value and it's a put, then it's gonna be totally different. So you can just come over here and hit this plus sign. When you hit that plus sign, you're letting the system know that you're going to be adding to it. And so you can go one leg up, or you can go two legs up. Let's go one leg up. Let's look at that. And look at the delta here is 47.51. The theta is 56. Chance of profit is 19.99%. Volume is 20. Interest is 13.12. Volatility is 61.62. Date 2/20 or 2026. And so you would just, what's it? Hold on, wait a minute. Hold on. I almost forgot a key thing. You got to go up to the top here. Once you click this in, which is a buy, then you got to go up to the top and click sell. All right, sell means that you have enough of these shares in your particular portfolio to do what's called a sale purchase. And so you'll look at here, and the sale is totally different from a buy. As you can see, chance of profit for sale, because sales mean that you own something. I mean, how else can you sell something if you do not own it? So sales goes up to 83.93%. Volume of 20. So you got 20 investors already have this in their portfolio. Then you got 1,312 that are interested in it. Then you have a volatility of 61.46, a delta of 47.22, and a theta of 55. And so you would just click on that ad column there. And then you will go back up to the top here and click buy again. And then you'll go on this side and you're going to click put. This is going to be a 4-leg strategy. Then so you will go ahead and look at put, which has 36.34 delta with a theta of 40. Chance of profit is 42.33. Volume of 39. Open interest is 24.538. Volatility 59.43. And so you would add to that. And then you go back over here and click and hit sell. Now you're going to have sell put, and you just go one leg below, which is that sale there is 22.76 with a theta of 34. Chance of profit 33.25. And as 40 investors already have this in their portfolio, you got 29,819 that are interested in it, and the volatility is 60.39. And so you will hit that there, and you will go down here. And this is going to be what you call a four leg strategy. And so you would go here and look at your break-even points. Here, this is your profit from here to here. Anything beyond that is insignificant. From this little red dot, or orange dot, to the green dot is your profit. This is your loss columns, and this is all that you can lose. This was just first one is it's about a little $100, or $197, actually $200. And over here in this leg here, you can lose 146. In this leg here, you can lose 51. In this leg here, you can lose 69. This leg over here is also be your profit. So this profit here could go to unlimited. See, I am telling you what that is. So that could be a pretty good strategy. Here's your profit again. $60.39.40. And from here, this is also your profit, because it's a four leg strategy. And then you just hit review, and then you place your one there. And then let's see, you place your one there, and then you go in here and put in play to try 245. And so that would be high likelihood. And this is your profit, your max profit here in this particular area, and this is your max loss. And this is just one way to implement a particular strategy that you may want to do if you have a limiting income, and still this was only cost you $245. Like I said, like I always say, all these demonstrations I show you are just for educational purposes only. If you're not familiar or knowledgeable about investing in the stock market, I would urge you to educate yourself before you go out and just try to implement these option strategies that I be showing you when you're investing in the market. Especially on options, you run the risk of losing your money. So the best, if I could tell you to do, if you're just starting out, is just simply buy and hold, and that is you just hit trade and you hit buy, and however many options that shares that you want in your portfolio, you just put that there in your portfolio. Let's see, and review, and so that's just a regular trade. See, that's just a regular trade. So don't be trying to get rich overnight, which I know a lot of you see. You think you can do these plays and strategies that you see me doing, and it takes more than just doing these trades and strategies, special options. You don't just do options and then go about your day and all nilly-willy, and you're not paying attention to your portfolio. Your portfolio can go against you pretty damn quickly, and so that trade I just did is how I got to this, which is 152 shares, valued at $2,337. I just buy and hold. This is not option. This is just regular trading. So this is what I'm trying to tell you guys, and try to teach you guys that you don't have to do options if you're not familiar with it. I do options because I've been trading in the market over 10 years. I started trading in the market when I was in my early 50s. And so now I'd be 63 in June. And so that's why I do it, because I know what I'm doing. But then again, I am not an expert. I am not the expert investor, and I am not an accountant, and I am not a tax person. So I'm just a guy in real lifetime that actually invests in the market. And as you can see, you'll see the numbers moving back and forth in my portfolio. And I use this YouTube platform to show you guys what I'm doing. Is if I can do it, you can too. But like I always say, it's not a quick get rich overnight scheme. And then it takes some time, and you can build up your portfolio just doing regular trading. Like I say, I do regular trading, I do option trading, I do day trading, sometimes swing trading. I can do it all. It's a lot to learn. It ain't gonna happen overnight, and you'll know when you're ready. When you start out, you'll know when you're ready. And like I said, I have a what you call a margin account. Many of you, when you start out, you're going to have a cash account. They're not going to give you a margin account. You need to have $2,500 in your portfolio in order to qualify for a margin account. When you have a margin account and you have a small portfolio, then you're able to double the size or the growth in your portfolio at a quicker rate than just having a cash account. Unless you got over 2,500, you got 5,000, 20,000, 30 or 40,000. Even with that, if you have a margin account, they're gonna match you dollar per dollar. For you had 2,500, now you got 5,000. If you got 30,000, now you got 60. So they'll match you dollar per dollar. And it's not a one-time investment when you have a margin account. It's not a one-time deal. Each time you put money in that account, whatever the amount is, they're gonna add theirs too. They're gonna double it until you go back in and change from margin to a cash account. And so let's look at the value of the stock this morning. So far, my stock in my ETFs is value is at $73,787 and some cent, 82 cents or whatever. It's up this morning by $700. And these are the holdings I have in my portfolio. I have 204 holdings. You do not need to have that many holdings in your portfolio. If you have the Magnificent Seven and also the S&P 500, you are doing great. If you have this many holdings in your portfolio, you might as well invest in the QQQ, Vanguard, either the S&P 500 ETFs. But I'm like a kid in the candy store, I just, I want everything I see. And so we got still some shares that were down this morning. Tesla is down. I have 3.56 shares of Tesla is valued at $4,500. Tesla's currently trading at $359.05. It's down this morning $2.57. So this will be a little bit more expensive stock to buy. 359 shares. That's how much it's gonna cost you. $359 a share. And I got Meta, Facebook. I have it's trading at $715.65 a share. 1.87 shares I have. I have a market value of $13.43. So far today, I made $1.57, total $355. And like I said, this is just regular equity trading. It's not options. I do. This is holding 204 holdings. This is holdings here. So I do options and I do holdings as well. You got Amazon, Google, Walmart, just all your favorite stores and companies that you shop at. Nvidia is 15. I got 113 shares of Nvidia, value at $15,290 some, 23.59% of my portfolio. Nvidia is trading this morning at 134.38, up this morning by $4.53. I had three option strategies in place, and Nvidia, which I made $668 from it. Next big one I have is down this morning, which is Palantir. Palantir is trading at 110.34, down 46 cents. Got 167 shares of it. Value of $18,489. So far I made negative 98 today. But total almost $10,000, as you can see. And the options in Palantir is not doing too good. I have 6 strategies, options. I have a value of a less value of $2,270. But so far today, with this trying to come back a little bit, I made $200 today off this particular option, but it's still negative $1,500. And so these are all the other companies or shares that I have in my portfolio. This is the offshore drilling. I only have 24 shares of it. For some reason or another, it's really, really cheap now. There's a market value on it, just under $40. Go figure. And so let's take another temperature check so I can get you guys out of here. The time just went by so fast. Let's see. Still, we are at $25,678. We are up this morning by $586. Was 110 in buying power still. Let's see. This is the options area. Crypto, like I said, I'm not too big in crypto. And we're going to scroll on down. We got Google. Google is up this morning at $2.45, trading at 187.78. I'm surprised Google is not higher than what it is. But I have 102 shares of it, value at $19,256. So far today, I have already made $252, total $2,940 some dollars. And so that's going to do it for today's video. And if nothing else happened significantly that affects the market, I will see you guys again after the opening of the bell on Tuesday morning. So until then, have a blessed day, whatever it is you got going for today. Whether you have to go to work, go to school, or what have you. Be safe out there. And we'll see you guys again after the opening of the bell on Tuesday morning. And have a blessed day. And thank you for watching.